Coming up today, stock indices trade lower as the Trump trade run its course. Masashi says Nvidia's undervalued. The latest economic data, treasury, liquidity, and all the latest earnings results. It's another big day, guys. Let's go. And welcome back, everybody, to the Daily Market Review on possibly one of the busiest days this Q3 earnings season. We've just heard from Microsoft right after the bell as I speak, currently trading a little bit up after hours, but pretty much flat here with a good summary on their quarter here. Better than expected. Earnings per share $3.30, above estimates of $3.10. Revenue above expectations, a bit over $1 billion. So a pretty good result, beating on both the top and bottom lines, but the market doesn't seem too impressed. However, we've got a lot going on today. Meta just reported as well, currently trading down a little bit after hours as I speak. And even though they too beat on earnings, 603 versus 522 expected. A little bit of a beat on the top line revenue as well. I think what's got the market pulling back a little bit on Meta here is their Reality Labs posted 4.4 billion losses in the third quarter. They're continuing to spend big on virtual reality. Mark Zuckerberg's really gone all in on this. Really wants to take the lead off Apple and lead in VR and of course the metaverse. So the market's a little sober after these two big results. We also just heard from Coinbase. It too trading a little bit lower after hours as they actually missed on expectations. We just heard from Starbucks. They too missed. New CEOs coming out with a whole new strategy for the stock. Robinhood just reported as well. Came in a penny shy of expectations. They also just announced the launch of futures trading along with index options, expanding their offerings. Market's not liking the result, down 10%. On deck tomorrow, the biggest consumer stock, Amazon. With Wall Street too bullish on their earnings, they should beat, and this will give us an important look at the US consumer, along with their guidance and what they think the holiday trading period is going to be like. We'll also be looking for their numbers on AWS, how they're performing in the cloud, and possibly the most important one this week we get tomorrow, Apple. Market keen to see how's iPhone 16 performing. What are their orders like for that? Apple's traded really well this last couple of months. On expectations, going to be a massive new upgrade cycle for the stock. Analysts expecting $1.60 and earnings per share. Revenue $94.3 billion. Actually fell a little bit today going into that. Also interesting, we're just hearing reports that Apple is considering buying Intel. Of course, this is not confirmed yet. Possibly just a market rumor. And Intel isn't moving on this news either. But like we've been saying for a few weeks, Intel could be in play with a market cap of $95 billion. Really important infrastructure, chip manufacturer in the States. It wouldn't surprise me if someone does take out Intel sometime soon, because if it were going to get taken out, now's the time to do it after the stock has been beaten down all year. And we do have some heavy signs of accumulation going on here. Day 2 report earnings tomorrow. We'll come back to that. And stick with me today because later on in this video, I'll share with you some insights from the comprehensive survey I conducted last week, along with how I used AI in this, which I think you'll find interesting. You may be able to use it in your own work as well. But just getting back to markets, we've got an everything rally going on. A lot of assets at all-time highs. Stocks, property, gold, Bitcoin. And in fact, looking at S&P 500 and gold's cumulative return this year, 57%. That's the best since the late 1970s. Stocks and gold absolutely on fire in 2024. And in fact, just looking at the S&P 500's one-year return divided by its one-year realized volatility, which you could kind of think of like the Sharpe ratio, currently above 3 here. And this indicator isn't necessarily a contrarian one either. Just looking back in 2008, it was actually really low. Same with the late 90s as well. Volatility was picking up while stock returns flatten out. So in other words, the stock market's been very kind to investors this year, giving really good returns per unit of risk. And in fact, the S&P 500 has just gone its 29th consecutive day without a close up or down more than 1%, which is actually the longest streak since late 2021. Market's been grinding on very low volatility. That's what everybody was forecasting coming into October, right? I'm just kidding, actually. The consensus was we were supposed to get a dip, but we virtually had no volatility heading into this most important election, which means we could get the move after the election, either a big up or down, because option dealers are certainly pricing in some moves around the corner. The VIX, 11.3 points above realized. Market's grinding on basically no volatility, but we've still got bond market volatility, move index, relatively high, and we have seen a bit of a pullback in oil volatility of late, but still relatively high as well. But once again, we're just getting these really flat, kind of shallow moves in the market here. Not much volume at the market level either. Looking at what else is moving out there today, Alphabet Google had a really good earnings result. Stock gapped up, finished the day 2.8% higher. Had earnings from Eli Lilly today. They actually came in with a miss. Stock sold off sharply to start the day. Was a bit of a buy the dip there though. Crushing it today, Reddit. Look at that, up 42%. Massive volume with a monster beat. Analysts were thinking they're going to lose money. They actually posted 16 cents in earnings per share. Also having a good day, Garmin, 23% on their earnings beat. Not doing so well today, DJT. Trump stock falling over 22% after it had been trading up to some crazy heights of late. A little bit of a pullback in the hot nuclear trade today as well. Lightbridge down 12% after its monster run of late. And the chips taking it on the nose today. AMD, with their earnings miss, down a whopping 10% today. And once again, Super Microcomputer is in hot water. Just getting news coming out that Ernst & Young, their auditor, just resigned. Really, really bad sign for the stock. Also getting news that they're facing a class action lawsuit for securities fraud relating to accounting manipulation. And this is not good at all for the former high-flying stock. Absolutely ripped out of the gate Q1 this year. But the thing with Super Microcomputer is they're actually NVIDIA's third largest customer, representing 11% of NVIDIA's revenue. So this is a worrying sign. Where there's smoke, there could be fire, maybe making NVIDIA investors a little nervous here, just pulling back a little bit today from these all-time highs. If we were to get news of any other of NVIDIA's customers engaged in some funny business, and obviously if those rumors were to spill over to NVIDIA, which has long been said online for a while now, people speculating on how they do their accounting, then we could see a sharp pullback in the market's most important stock as well. So we'll keep an eye on that. Just moving over to the macro yields, still marching higher. And stick with me today because it'll get you updated on the latest economic data, how the US economy is growing, along with consumer spending, preview of what we might get this Friday in the jobs report. But another trend I've been noticing in the market of late that I wanted to share with you guys today, restaurant stock doing pretty well here. Brinker International, they own Chili's. Look at that, ripping up there today on pretty good earnings. Shake Shack popping up today on earnings, as did the Cheesecake Factory, also trading well of late. Wendy's going into their earnings tomorrow. And even though Texas Roadhouse just missed their earnings last week, its stock too is breaking up. The only one really bucking the trend there today, Wingstop, even though they beat on earnings. Market didn't like the outlook, down 21%. And there's the look at the biggest of them all. McDonald's actually found new weekly lows here today as they're still grappling with an E. coli outbreak. So we'll keep an eye on these restaurant stocks. There's a look at gold, $2,800 an ounce for the first time ever, continuing to march higher. A little bit of a pullback for silver there today, along with Bitcoin, another asset just catching its breath at all-time highs here. Also interesting to hear, the world's third largest company, Microsoft, has just started a shareholder vote on whether to add Bitcoin to its treasury, which would be another sign of validation for the cryptocurrency. You've got one of the world's biggest companies adding it to their balance sheet. We also got news Bitcoin maximalist Michael Saylor and his MicroStrategy company is planning to raise $42 billion to buy more Bitcoin over the next 3 years. He can't get enough of it. His company already owns over 1% of all outstanding supply of Bitcoin. There's only over 21 million coins out there. Latest count, I think he had over 230,000. He hasn't added any since mid-September. Basically, this guy just sells cheap debt and just plows it all into Bitcoin. Seems he's figured out a magical trade, which will continue to work like magic so long as Bitcoin holds up. He doesn't get a margin call. And there's a look at MicroStrategy. It too been ripping higher this last month. Now got a market cap 45 billion, even though sales have been flat over the last 5 years. Underlying software business doesn't do quite $500 million a year in revenue. This is pretty much just a Bitcoin holding vehicle. Nonetheless, it's working for him, but believe it or not, his stock is still not back to those crazy late 90s tech bubble highs, in which he did a great job hyping the stock up back then. So we'll keep an eye on this, because if he pulls this off, Bitcoin does go to $1 million a coin. He could be one of the richest men in the world and may have actually cracked the code. But just jumping back to the market for a minute, we got Citigroup saying today, stocks are gripped by near euphoric sentiment, and the election may offer a chance to pull back, which I'd say a big part of that is who's going to win, so how the market reacts. Citi cautioned investors against piling into a rally fueled by a Trump victory. They said a potential rally could slow after the initial euphoria wears off, and they think a Harris win would present a short-term buying opportunity. Either way, it's going to be interesting to see how the market reacts, because there's only so much of an effect President White House can have on the market. Most of the economy runs itself. However, the prospect of less regulation, lower taxes, has to get the market excited like it has been of late. And so my thoughts are that if we do get a Trump win, the market may actually rally the next day in relief, as we are coiling up going into that. And while we may initially sell off in a Harris win, it may be a buy the dip opportunity as well, especially if we get a really sharp and quick sell-off. However, we're also getting some other analysts saying the Trump trade may have already run its course. Treasury yields may have reached a short-term peak as allies of the former president advocate for steep spending cuts. That's Elon Musk, who thinks he can get federal spending down by $2 trillion, pretty much take away the whole budget deficit. Imagine that, the US getting to a budget surplus in 2 years, taking more in receipts than what they spend, can actually pay down the debt, and that'd be a sight to see. However, that's a big if and but, like turning around the Titanic with a little fan in the water. It's going to take a while and a bit of time to accomplish that. But like UBS says, it won't be an uneventful event. In other words, expect some volatility after next Tuesday. I'd say we get a lot of volatility if it's undecided. Maybe this is what option dealers are pricing in. The prospect for no real clear winner on the night, maybe just not pricing in the potential Harris win as well. Also interesting to hear today, we're getting reports that Trump's told Israeli Prime Minister Netanyahu that he wants the war on Gaza ended by the time he enters office, potentially a sign that he may pull back American support. And this is what we've been hearing on his stance towards Ukraine as well. He's even said that he may start negotiating the end of that war before he even enters office in January, assuming he wins. Also, don't forget we've got China holding their big meeting next week. They may do a big fiscal package regardless of who wins, but maybe come out even bigger if Trump wins, as he has said lately that tariffs is his favorite word in the dictionary, implying he intends to use them on China. One thing that's going to be interesting to see over the next couple of years is if American exceptionalism can continue in respect to the significant outperformance and valuation gap between America and the rest of the world. Looking at the relative forward PEs here of the US versus the rest of the world, America 60% higher than the rest of the world, highest it's ever been. And like I always say, a lot of that is well justified because of the significant earnings growth in America, sheer domination of the most important industry in the world, technology, now AI. This could very well continue for years to come. Also interesting to hear today, CEO of Google say more than a quarter of all new code at Google is generated by AI. Now got code writing code. And CEO of SoftBank, Masayoshi Son, really interesting guy, thinks Nvidia stock's undervalued because AI companies need to spend another $9 trillion to achieve super intelligence. He doesn't see Nvidia going anywhere anytime soon. And what we've just heard from AMD as well, doesn't look like they're going to be catching up to Nvidia anytime soon. And he actually said $9 trillion, maybe too small a capex company needs to spend on these advanced GPU chips. One thing the market will be looking for is to get that super micro issue cleared up. While we're getting all these reports of dodgy business going on at SMCI. And how does that play into Nvidia's reported revenues as well? Just moving on to the macro, US GDP rose at 2.8% annualized rate in the third quarter on strong consumer spending. Economists were expecting 3%, came in a little shy of expectation, but still shows the economy is in pretty good health. We also just got the ADP jobs report, came in pretty good as well. 233,000 job gains in the private sector, well ahead of expectations, with economists actually forecasting less than half of that, 113,000. Doesn't really look like the hurricanes, Boeing and port strikes have really affected this, although ADPs are not really a good predictor of the non-farm payrolls that we'll be getting on Friday, although it is good to see 12-month breakout on the ADP employment change chart here. But forecasts have been shaved. October jobs report should show 110,000 new jobs created in the month of October that we'll hear this Friday. Unemployment rate expected to come in 4.1%, which again is remarkable if we get that considering the hurricanes and strikes. Also interesting today, we just got an update from the US Treasury along with their refunding and market operation plans. All pretty much bullish for the market and liquidity, especially buried deep down in their report here. They plan to conduct weekly liquidity support buybacks of up to $4 billion per operation in nominal coupon security. In other words, basically buying treasuries back off the market, boosting liquidity, helping to bring yields down as they've run up a bit of late. And like someone posted on X today, someone got concerned about the rise in yields. And I'll give post of the day to Charlie Bellio. Stocks all-time high, home prices all-time high, gold all-time high, Bitcoin all-time high, national debt all-time high, core CPI inflation above 3% for 41 straight months, longest period of high inflation since the early 90s. The Fed cutting rates again next week after they just did a big 50 basis point cut last month. So that's the Treasury trying to push back a little bit on these yields. Have shot up significantly ever since the Fed cut. There's the 10-year the day before. It's down at 359. Here we are at 430. Added on 70 basis points just a bit over a month. But the market's just so well propped up by all this liquidity, huge corporate buybacks, always decreasing the supply of shares out there, along with really supportive language from both the Federal Reserve members and the Treasury. It's almost like the crash has been cancelled and this market is very well supported. Okay, as promised earlier in this video, I was going to share with you guys a few insights from a comprehensive survey conducted on the channel last week. Big shout out to everybody who took the time to fill it out. 21 questions, multiple choice, and text-based answers as well. So you could really speak your mind and share your opinion and feedback with me, which has been really helpful so I can make better content for you guys. So I really do appreciate it. And so I thought I'd just share a few insights with you guys. So I had 376 completions of the survey, a bit more than I expected actually for a comprehensive survey. And so there's a look at what percentage of you guys have been watching the daily market review for more than a year. Good to see 21% of you are still with me after a year. Channel's just a bit over a year and a half old. How often you watch the daily market review? Really nice to see. Almost 82% of you guys watch it every day it's published. And even though you didn't enter your location in on the survey, I used the IP addresses of the computers you used completing the survey to determine your location. 43% of my audience is from the States. Coming in next, Australia. 13.8, Great Britain 6.9, Canada 6.1, other notable countries Germany, Hong Kong, Singapore, Sweden, Denmark, Netherlands, Spain, and heaps of other countries as well. Viewers from all around the world. What percentage of you guys like my content being more bullish and focused on opportunity? Interesting to see. 1.6% of you said no. Maybe I've got 6 perma bears following me. Neutral 25%, which I understand. It's not that I'm going to completely ignore the risks. It's just that I'm more focused on what's working, where the opportunities are. But good to see almost 3/4 of you guys like my content being more focused on the opportunities, which I think is what really separates my content from others. Also interesting, I added a question in the survey. When do you think the S&P 500 will crash? 4.8% of you said any day now. 21% said next year. 11% said in 2026. 62% said I'm not sure, which I thought was interesting as well. And if I were to answer this survey, I would answer I'm not sure as well. So like I said, I did have 21 questions, both multiple choice and text-based answers, but I don't want to give too much away because I know I've got competitors who watch my videos every day who are already copying me, so I'm not looking to give too much away. But I do want to say a big thanks to everyone who filled out this survey. And one of the questions I asked, what products or services might you be interested in? And I gave 9 choices, and there was a clear, overwhelming winner. And so along with the help of AI, I've already started work on my next product for you guys, and I'm pretty sure this will be my last product as I don't really have the capacity to do much more. So I've already started on that, and stay tuned in because in the next few weeks, I'll have some more info on that. But also today, I just wanted to give you some insight in how I've used AI to help me better understand you guys and make better content and serve you better overall. So I know a few of you guys are business owners. However, even if you're not, I think you'll find this interesting as potentially an investor in AI or something you can even present to your seniors at work as well. And so I know there's a lot of skepticism out there about AI. Does it really work? Is it really such a big deal? Was it just a little fad of the day? However, as you know, I argue that it could be potentially a leading part of the 4th industrial revolution, helping businesses and society with huge productivity and efficiency gains. And so I thought I'd use this survey as a way to give you some insight on how AI is helping to bring down the cost, save time, and more importantly, give deeper insights into our businesses. So you could kind of think of data as new oil, new lifeblood of the economy going forward. And so just looking at surveys back in the early 20th century, companies would have to send representatives to people's homes, a lot of manpower, travel, logistics, manual records, took weeks, hundreds of man hours. Then of course we got the telephone. Companies could just conduct telephone surveys. Still would take a long time, manually collate all that data. Then along came the internet and software where we could easily email out surveys and we could see some interesting charts, just like the ones I just showed you. Now we've got AI. Now, even though I didn't use a modern day survey app, as I know my way around code, I was able to create the survey myself, export all the raw data into a spreadsheet for those charts. I also uploaded all the raw data into ChatGPT, and I've been able to have a conversation with GPT to better learn who you guys are and how I can better serve you. And I also use GPT to help come up with the questions. And so all in all, it's pretty much cost me nothing to run the survey. And I think I've spent about 2.5 hours of my time in both creating the survey, mention it to you guys, sending out an email, plugging all the data into a spreadsheet and GPT. And I've been able to talk with it like I'm talking with an expert who's read all 21 responses from all 376 of you guys out there. Something that would take me hours and hours to do, and it'll just be too much info for me to process anyway. So I'm sure there's new survey apps out there. You could probably pay $20-$30 for a monthly plan, cancel it after that, and it'll do all the same thing that I've done myself with the raw data. But like I said, it's pretty much cost me nothing. It's taken me a couple of hours, and I've really got interesting insights into you guys. I can sit here and ask questions to GPT, like for example, customers that rate me highly, what do they like most about my content? Asking GPT, what do you think my customers would like out of a product? What are their challenges? What are they struggling with? How experienced are my customers? You can ask it anything. Like I said, you're just basically speaking to a person, conversational AI. And just to give you a quick example of that, what I mean, here's one of the questions I asked GPT after I fed it all the data. How risk averse or risk seeking is my audience? For which it told me you guys are moderately risk adverse. You've got interesting guidance on risk management and other interesting insights. And like I said, this is just one question I've asked GPT based on all the data it's seen. And so think about that. For a company before the internet, they'd have to spend thousands of dollars on labor hours, conducting telephone surveys, getting all that data, reading through it all. Then the internet, which would pretty much just give you charts like I showed you in my spreadsheet. Any text-based answers, you'd still have to pretty much read them. Now with AI, it can do all that and give you really unique insights, better analytics, so you can make better decisions and match your content, products, and services to exactly what your customer wants. And so this is just one way I've used AI. And like I said, what could have cost me a lot of money going back in time, that's money I've saved and can instead instead invest into something else. So it's given me a huge time and cost saving, more productivity, more efficiency, and deeper, more actionable insights into who my customers and audience actually are and what they want. So I thought I'd just share that with you guys. And like I said, whether you're a business owner or not, or just interested in investing in AI, I know there's a lot of skepticism out there. People don't really understand its use case, how it can help, but it's really this, not only the time and money saving, but the insights. It's kind of like what Palantir does. They pull data from every aspect of a business, from their customer emails, orders, logistics, management, staff, you name it. And they can help companies make smarter decisions and things a lot more efficient. Scheduling staff and assets, predicting maintenance, you name it. There's so many use cases for this, and that's why I think it's revolutionary. And I'm a long-term AI robotics bull. So once again, I just want to say a huge thanks to everyone who took the time to fill out this survey. You've done me a huge favor, and I think it's really going to help me make better content and products for you guys. And I've actually got some really interesting insights and stuff I really didn't think about before. And like I said, if you run a business or work for a business, I highly encourage you to do the same thing. Okay, just diving back into the charts here. It's the latest on Microsoft as I speak. Now down 3.8% after hours. Meta as well, off a bit here, 2.5%. Bringing down the Qs, almost 0.5% after hours. Could be in for a bit of a soft start tomorrow. Although their numbers were pretty good, that's why earnings can be so unpredictable. It's not whether the company beats or not, or gives good guidance. The market completely do its own thing. So I think maybe you just got a little bit of risk coming out of the market here. I mean, we've only got 3 full days of trading left before the election on Tuesday. Still got a bunch more earnings to get through this week. Jobs report on Friday. But overall, market's just a little on edge, and we may actually get the big uncoiling next week after the election. That's all for today in the Daily Market Review. I hope you enjoyed it. Thanks very much for tuning in, and I hope to see you again this time tomorrow. Cheers.